If you are a Bitcoin holder, it hasn't been such a bad week. It's been okay. Not the best week we've ever had. We've had our ups and downs, but we're still very close to 30,000. If you're a Solana holder, it's been a rough week. I mean, it's been a really, really, really rough week. And a lot of people after the collapse of Luna are now looking at Solana and going, are we actually safe in Solana? Is Solana going to be the second protocol that's going to go to zero? And then there's a whole lot of stuff going on about the Fed and the recession, and Larry Fink coming out yesterday and saying this may be much longer than we expected. So it's going to be, there's a lot to talk about. There's a lot to talk about this week. And today's Friday. It's one of our big banters. And let me tell you that today is the biggest banter that we've had in a long time. We've got some huge guests for you. We've got Yat Siu, we've got Haseeb, we've got a whole lot of people here. We've got Punk6529. Today's a banter that's going to be about global macro layer ones. We're going to talk about the market, and then we're going to talk about gaming and about Metaverse. So it's Friday, and you know what you need to do, right? And let's do it. Today we eat water. Love that. Today we eat water. Yo, Banter fam, welcome back. Nice to see you guys. I am tired. Everyone says I look tired. I am very tired. But I'm here and I'm bringing you crypto love and I'm bringing you crypto wisdom, and we're going to make this a huge, big Friday banter because there's lots going on in the market. So we're going to talk about all of that. So if you're new to the channel, you know what to do. Subscribe to the channel, like this content. Subscribe to the channel, like the content. Also, if you haven't yet subscribed to our daily candle newsletter, you're lost because it comes out every single day and gives you 5 or 6 charts. Today, we've got Bitcoin chart from Sheldino Tentino. Speaking of Sheldino Tentino, he did another show today, and on his show today, he told us that he's preparing for another trade tomorrow. So go watch that show. There's his show over there. He's saying he's getting ready for another trade. Go and follow him. Make sure you do what you need to do to get there. Also, before we start today, remember that today's show is brought to you by NordVPN. They're sponsoring today's Friday Banter. It's one of our biggest Friday Banters. And I've said to you guys before that I think that NordVPN is an essential part of what you need to have as a crypto trader. If you're not trading with a VPN, if you're not masking your IP address, you're doing this all wrong. You've got to be masking your IP address. You've got to be making it difficult for hackers to get into your computer. And more importantly, you need to be able to browse the web anonymously. And you're not browsing the web anonymously if you're recording the IP address of your computer. So it costs you guys about $3 a month to protect your crypto and hide your IP address. There is a referral link below. Click on the referral link below and give NordVPN some love because they are the guys that are bringing this amazing content to you. Without them, this wouldn't be possible. So yeah, official channel partner. Alrighty, let's kick off the show today. Let's quickly look at what's happening on the market. Bitcoin, 29,568, coming down because the NASDAQ is coming down again, getting obliterated again, 2% down again. Altcoins getting killed. If you look at the Bitcoin dominance, 47%. That's a scary Bitcoin chart. And that's the chart of a market that's going into a bear market. This is also the chart of a market going into a bear market when your favorite biggest alt that was trading at $200 or was trading at $145 on the 2nd of April, which is like 2 months ago, is trading at $37. I mean, this is not like a baby small altcoin. This is Solana. This is Solana. This is like I don't know, arguably you could say the second biggest layer 1 blockchain, and it's trading at $37, down from $145 2.5 months ago. I think there's a lot of questions being asked about layer 1s and layer 2s, and I think that's probably a good place to start this Friday banter about the future of layer 1s. Are we going to be in a world where there's going to be Ethereum and there are going to be multiple layer twos living on Ethereum. We're going to live in this one chain world. Or are we actually going to have these other blockchains, significantly sized other blockchains with network effect? That's one of the big questions. And I think the best person to speak to about this is Haseeb. Haseeb's from Dragonfly. Dragonfly were one of the funds that seeded, I think, investments like Avalanche. I think you guys also seeded investments like Near Protocol. So I guess that you guys are pretty confident that there's going to be multi-chains, right?
I don't think it's a question of being confident. There already are multi-chains, right? This isn't a question anymore. It's not a debate at this point. It's clear that there are more users who are not on Ethereum than who are on Ethereum. If you just add up all the other layer ones, and there's so much activity going on, there's so many new projects that are being launched that are in this multi-chain environment. And it's really clear. Look, I mean, we're talking a lot about Ethereum and the layer twos. Ethereum itself right now, like the Ethereum 2.0 story, is still really far away. We're all excited about the merge. The merge is going to be a big deal for Ethereum's overall economic picture, but it's not going to improve scalability. And this is a very common misunderstanding about ETH 2.0. It doesn't increase the gas limit. It doesn't allow sharding. It doesn't do any of the stuff that actually makes Ethereum usable for millions of people. It's still going to be very expensive. Gas fees are going to remain really high. You need a story. Now, the story for some people is, okay, it's going to be layer twos. So Optimism's token launch was just a few days ago. Arbitrum is probably going to be the next token launch that we're going to see, if I had to guess. And then we've got the layer twos that are the ZK layer twos like Starkware and Matter Labs. Those are going to be coming probably sometime over the next year. But the reality is that the usage of the layer twos are live. The layer twos work. How much TVL is there in the layer twos? How many people are using the layer twos? The answer is not that many. Even after Optimism's airdrop, which is now, it's trading at 6 billion fully diluted valuation. Optimism's airdrop, still the TVL on Optimism is less than 400 million. So if you compare that to the actual other layer ones, that's clearly where the activity is. So I think the story here is that, look, people are, anytime that you see fear of the macro or fear of interest rates going up, things that are farther down the risk curve are going to get hit worse. And that's the alt L1s. And Solana got hit the worst because, they just had an outage. So the story about Solana of like, hey, it's a super high performance chain. It's super, cuts all these corners in decentralization to get higher performance. That story makes sense. And I'm in some sense, I'm a believer in that story. But the reality is like, look, if you keep going down, like what you can't rely on this thing as a blockchain in that case. If every other day you're seeing some kind of performance problems, then entrepreneurs, builders, people running DeFi, people trying to build games, they're like, look, if I don't know on any given day if this thing's going to be up, I have to go rely on, even if the chain is lower performance, if it has uptime every single day, that's fundamentally what I and my community need in order to rely on it. So that I think is the biggest constraint of why Solana is getting the brunt of the damage. But all the other alt L1s, they're maybe down, 1-2% today. Solana got hit the worst, and I think that's probably the reason why.
All right, we've got Yat Siu from Animoca Brand. Yat, welcome to the show.
Hello, nice to be here.
Love to hear your opinion about Ethereum versus a multi-chain world, and specifically in light of what's going on with Solana and the fact that they have been down again. And I think before Luna collapsed, people were kind of tolerant around outages, technological issues. But I think since we had the Luna collapse, I think investors are now realizing that protocols can go to zero. Now, I'm not insinuating that Solana is going to zero, but I think people have become a lot more cautious, right? What do you think about the future of Ethereum versus the future of Solana?
So, first, just to address the earlier question, I'm in absolute agreement that it's a multi-chain world. It's a multi-chain world that's beginning today, and it's going to be multi-chain in the future. The way that we think of chains is essentially like countries, meaning that, just like how we won't all want to live in one particular country, there should be multiple countries, multiple cultures, multiple sort of interests, so to speak, that are represented this way. We think of chains in somewhat the same way, because each of them have their own communities and have their own culture. So Solana expresses its own culture in a different way that Ethereum does, or what exists in Flow. That's kind of sort of high level how we think about that. But of course, Ethereum is the one that has, the strongest network, shall we say. It has got the longest history in effect, and it also has the strongest culture. So, and that's what this is how we see it, right? Culture is sort of the most important thing here. Some of the newer layer ones that are out there are young, and therefore the culture is still emerging. And therefore, the strength of the network isn't as strong. That doesn't mean, though, that the network is going to be sort of, gone or something, right? It just means it's evolving, which is both the risk and the opportunity. Now, I think specifically on the topic of Solana, I think Solana has had not just one or two rough patches, but really this whole year has been really, really rough, right? For many reasons. And I think one of the other sort of blows really on Solana is that I think the teams really, want to do the right thing, but when validators start questioning even, why NFTs, why NFTs should even be around at one point, then a lot of people start sort of doubting it, right? And so what we have here is, when you think of a chain as a political system, you have the question about, watching politics unfold where people have disagreements, and just like we see countries that have disagreements in the political sphere, then people start questioning it as well. Is a community strong? Are they working together, or are they all disagreeing and all that stuff? And I think Solana is struggling a little bit with that. I have faith in Solana in the long term, but I think going through fire actually often has the effect that you ultimately come out stronger. But the macro picture also isn't helping per se. But we're big believers in a multi-chain future, and I think Solana will come through this effect. Now, specifically, what's happened here? You talk about Terra, right? I mean, Terra was a targeted attack. That was something a little different here, right? And while this could happen in some ways to other chains, this was a malicious attempt. I would consider this literally like a kind of on-chain war, right? And so that is again a question of how strong and resilient is the network that can resist that, and the risks that might be attached to it.
Look, I mean, you talk about people arguing and with presidents and leaders, and I remember a little discussion between Punk, who's with us here on the show, and Vitalik, where Vitalik said, he didn't anticipate that the future of Ethereum was going to be in I don't know, apes and monkeys. I think that's how he described it. And he said, and that's what it is. But ultimately, that pays for his foundation so that he can do amazing things. So we got Punk with us. Punk, I'm very keen to hear your view around the Ethereum Solana. And let's not even nail Solana. Let's talk about Ethereum versus all the other ones. And in this case, let's talk about Solana, because Solana was probably the second biggest in market cap as a blockchain, if you want to call it that.
Right. Look, my general view on life is I don't have excellent views on how different chains are going to perform, either operationally or financially. We will, of course, have multi-chains. Whether it's these chains or some other chains, we'll have to see. The Vitalik thing was incredible, because, I mean, far be it for me to disagree with Vitalik on anything. But I do think he's wrong there. NFTs are not about people overpaying for a monkey or whatever he seems to think it was or is implied in his message, because he's saying, like, oh, look, we need to do things like soul-bound tokens and none of this overly speculating on monkey tokens or monkey JPEGs. But NFTs are a social construction, and they're a social construction that can be a container for any intangible asset in the world. And any intangible asset in the world is several tens of trillions of dollars, where that can migrate from off-chain to on-chain. That is a genuine use of a smart contract blockchain, that you can have a transportation layer for intangibles. We didn't have that before, right? The transportation layer for intangibles before NFTs is contracts and physical goods, right? Like IP and so on goes with contracts, a piece of canvas, a photograph, the rights to photograph, all of that happens in very non-scalable, very non-digital, very pre-internet ways. And so now that you can do this on the internet, this becomes a very big deal, arguably, in my opinion. And this is not to say we don't need DeFi, and I mean, exchanges are very useful, AMMs are very useful, but it strikes me that the opportunity and the utilization for NFTs is going to be much larger than DeFi and much less regulatorily risky. The idea that, major economies are going to allow you to run a parallel financial services system unregulated seems implausible. Now, what that means, I mean, the outcomes are very strange, right? Like, do you end up with a regulated AMM and an unregulated AMM? Do you end up with, white Ethereum and gray Ethereum. I don't know. You might have that type of outcome, right? But the idea that voluntarily the SEC is going to say, yeah, we're going to apply all these rules to on-chain exchanges, off-chain exchanges, but the on-chain exchanges don't have to worry about any of that stuff. It's totally fine. There's no chance that's going to be their view, right? Whereas, take the extreme example, a piece of art, an X copy NFT, has clear First Amendment protection. Right? There, of course, you can generate securities using NFTs, and some people are doing that, and they shouldn't be. They're not thinking carefully about it, right? You know, you go and fractionalize a DAO and say the revenue is going to come here and go to the holders and all these things. That's for sure a security. To take the other end, no, X copy releases a piece of art and says, yeah, the mechanism to transport this art's an NFT. That has First Amendment protection. The SEC is not going to be able to say, look, you need to clear your art with me in advance. And so I think, to be honest, I know a lot of very, very smart, very, very technical crypto people. Almost without exception, my view has been, and we'll see in the long run if I'm right or wrong, they've underestimated NFTs because they're in the phase where they look silly, right? You don't look at a bunch of monkeys and cartoon characters and cartoons with hoodies and say, oh, this is a very important thing, right? So we'll see, but I think they're going to be a very big deal.
Oh, well, I guess then that's a brilliant segue into the world of NFTs and a great place to welcome Brian to the show. So you say that NFTs look silly, and I think to some people, and to the naked eye, you know, you look at a picture of a punk or of a monkey or of an ape, and it does look silly. But I think that when you take a deeper look and look at what's happening now with ApeCoin and the other side and consolidation of brands under one stable, I think that silly may start looking like the future Disney, the next conglomerate, the participation of consumers into brands. What do you think there, Brian?
Yeah, I think that's a really good point. And I think NFTs obviously enable a lot of use cases. We're even seeing it with films now. You know, the films are finding ways to utilize NFTs. There was a film recently done with an NFT. You had to actually physically have an NFT to access the film. And we're obviously seeing it with video games as well. There's so many awesome use cases. I'm a longtime gamer, and like I remember in my World of Warcraft days, like if I didn't have to trade gold on the black market, and like, you know, you couldn't really sell your characters, and you're just basically wasting your time. It's kind of like the Vitalik story. That's basically his story. They nerfed Warcraft, and he got pissed and basically built Ethereum. And I was kind of in a similar boat where I was playing these games, and I was like, what am I really doing here? But like now with like NFTs, we can like save our game progress and like our characters in NFT, and like there's all these great use cases like in the real world. With films and NFTs, or with video games and other use cases. So I'm pretty pumped about those particular entertainment kind of categories for NFTs. Beyond like the pictures and stuff, that's cool too, you know. But like he was saying, you know, that's just kind of where we're at. But like we're going to this world where there's entertainment. There's like the next Disney, like you said, could be using NFTs in all sorts of different ways. You could own characters from your favorite show, you know, things like that, where you're actually like a part of the show. So yeah,
you guys are very much insiders in the metaverse world and the NFT world. And I mean, I must say, I think I know a reasonable amount about crypto, but when it comes to NFTs, I feel like it's a parallel world, but actually another world. Like it's very hard to be as good at NFTs as you are at everything else. When you look at the NFT world today, what do you see as the biggest advancements? What do you see as like the wow moments, the aha moments? Because, you know, from the outside, you know, we've seen a whole lot of NFT games. We had the NFT play to earn gaming run. We've had the NFT play to earn gaming collapse. And it's the same with all the other assets. But what are you guys seeing as insiders in that world where you're going, that's a game changer. That's the next Axie. You should be watching that. Love to hear it from you guys. Yeah, maybe we should start with you here. Because I know that you guys have got a huge portfolio, and you guys are actively investing. In fact, every investment that we make, it's always Animoca Brands, and Animoca is behind us. So love to hear from you.
No, okay. So first of all, I mean, I just want to echo this thought about sort of, and from our perspective, NFTs are absolutely critical to, frankly, we think also the success of any chain. And the reason why is that non-fungible tokens in the digital context represent cultural TVL for all of those finance guys who need to have some kind of definition. When you think of the physical world, right, conspicuous consumption, the way we spend on luxury, sort of social identity, the amount of money that we spend on essentially these type of things are effectively real world NFTs, right? And they actually lock value in the economy. The more conspicuous consumption, the more general economic activity you have for these items in any economy actually makes it stronger. And those that don't have it because they don't have property rights are actually weaker as a result. So one of the reasons that we think that Ethereum is very resilient is because of NFTs. And the larger the NFT economy will become, broadly speaking, right, the stronger it is. And as silly as, Punk talks about the fact that some of this is silly, but in the real world, many things seem silly to us, right? Many of the ideas that we have today appear silly. Why should a Birkin bag be worth, millions of dollars, for instance, right? Why do I spend
a couple of $1,000s on a Gucci bag? I think that was on a Chanel bag. I think that's absolutely silly, but she does it, right?
She does, exactly. And for her, it's a social status or maybe something that's cool, or because what you're really doing is you're buying network effects in this manner of fashion, right? So then let's talk about sort of, you talk about gaming and the relative collapse and everything. So we don't see it that way at all. And that's not just because we invest in it, because, certainly if you look back in 2017, 2018, or 2019, right, those were very small markets. These are still billion-dollar enterprises, broadly speaking, lots of revenues being driven there. And maybe, the prices are certainly lower than they were at peak. But broadly speaking, when you look at this angle, I think in the crypto world, we're all a little spoiled. We expect to see something next week, right? We want to see token prices increase every week, every month, right? But you know what? Just like in the real world, this stuff doesn't happen, basically in that kind of time span. You still need time to develop. But when you map it out over a longer period of time, over the years it takes to develop, then actually still it's growing. And the main reason this growth continues to happen is because you have new users entering the space, right? So if you believe, as we do, that Web3 and the metaverse is basically the next iteration of the internet, then we have 4.7 billion people still to onboard. And we're not even past 100 million users today. And certainly in GameFi, probably only in tens of millions of users. So there's still a big growth. But there's experimentation going on, economic models that have to change, right? Designs of, how does it work? How does it function? And, it's basically planning, right? That's going on that, we haven't found, the companies are all still trying to figure out what the best answer is. But at the end of the day, they're still growing. And so where do we think NFTs will go? Broadly speaking, because NFTs are these open constructs where people are building on top of it. Remember, Axie Infinity, probably the biggest blockchain game in at start, right? That sort of demonstrated play to earn. Its growth did not come because Axie did a marketing campaign in the Philippines. It grew because another company, in the Philippines called YGG, that had no real interest in Axie except through the ownership of the assets, created an Uber-like business model and added value. So what you will see happen is that these NFTs are going to have multiple use cases. There's going to be thousands of businesses constructing on certain kind of NFTs, and the value of these NFTs will come because they will have multiple network effects embedded on them. The value of our physical cars is because we have thousands of services available as today, much more than we had 100 years ago when the car was first created. And we see that evolution. So it's not that we think that there's going to be a new technological approach on NFTs, but rather that new people will innovate on top of the ownership of others, much how if people added on top of open source.
So I think, go ahead.
Yeah,
Man.
I'd love to jump in. What Yat said is very interesting, because he mentioned the car, the creation of the car, and if you ask people now, like there's so many use cases we can't even imagine right now for NFTs. And if you go back to the car, for instance, when there was the horse and carriage, this is actually a real thing. They asked people, with a horse and carriage, what do you guys want? They didn't say they want a car. They said that I want more room for more passengers. I want bigger wheels. Same thing with DVDs. What do you want? They didn't say streaming. They said better quality. I want to be able to get access quicker. Same with like Blackberries and iPhone. It was like you ask the Blackberry user, do you want apps and all these things? They didn't say that. They said they want a little bit faster or something like that. So anyways, with NFTs, it's the same thing. It's like we can't even really imagine. I'm in the same category. I can't even imagine all the thousands of use cases that are coming. And they are coming, but it's going to be very similar, I think.
I must say, I'm kind of shocked by the speed at which NFTs have evolved. If you think about, take 2 years ago, if you would have spoken to a crypto investor 2 years ago, very few investors were in the world of NFTs. And you fast forward 2 years, we've got apes, punks, we've got films coming in, we've got identity NFTs, we're playing to earn. So I think to me, I found NFTs to be the most surprising part about crypto, because it's the one thing that I think no one expected. Maybe I hate to say no one on a stream.
Yeah, I don't think you should say no one expected, but most people didn't expect.
I don't think when they created CryptoKitties, I don't think that they expected this. I think it was a great idea, and I was around for that. And I remember the days that CryptoKitties stalled Ethereum, but I don't think that anybody ever thought that we'd get identity on an NFT and that we'd get ownership certificates on NFTs and play to earn gaming on NFTs. And it still feels like every day we're getting more and more use cases that we ordinarily couldn't imagine. And to me, it just feels like this revolution has happened much quicker than any other revolution. And I think much quicker than crypto, much quicker than any other crypto adoption is NFT adoption.
Agreed.
I just want to sort of quickly interject here on this point, because nowadays, back in 2017, 2018, a lot of people, and even before, the way people onboarded on crypto was because of Bitcoin. They wanted to hold Bitcoin because of its speculative values, its sort of potential increase, for instance, or part of a new movement, right? But today, a lot of new people are actually entering because of GameFi or because of use cases. I meet a lot of people in Hong Kong whose first entry into the world of crypto is owning sand, right? And they don't even think of it as crypto, right? They just think of it as something that they can use in a sandbox and may have value, but they don't. So that's kind of one part here. And I think because crypto started very much in financial terms, the way I like to describe it is that, crypto is born from sort of a Wall Street movement. And Wall Street and the financial sector is still the minority in terms of global interest, even though it's so important. Right? Most of the world are not just sort of thinking in Wall Street terms. Most of the world think in cultural terms, in terms of sort of different forms of identity. And so if you come from that world of Wall Street, actually looking at things of culture is maybe a little alien. You don't value it that way. But actually, what NFTs do is they actually create transparency and create economics inside these items of culture. That one of the reasons why a lot of people in Hollywood, or many actors, or many musicians, or many artists are drawn to this, much more than say, let's say classic financial types, is because it speaks to them. And most of the world is actually people like that, who engage in tradition and culture. And that's why it's happening so quickly, because it speaks to the language of most of the world.
Not everyone understands, not everyone wants a decentralized, censorship-resistant money. Not everyone understands high APYs and APRs, but everyone wants to own cool, limited edition, provably limited edition cool shit that is reflective of their culture. And I think that's where NFTs beat blockchain and crypto. I have a question, because you're all investors and all astute investors, and specifically in the space. Investing in first-generation platforms, is that a smart move? And why I say that is, Axie was great. I played Axie. It was fun, but I mean, if you're a gamer, I think there are much more fun games than playing Axie. Like, it's a reasonable experience. It wasn't a great experience. And now you can kind of see in the numbers, and you look at the assets being sold, and you look at the usage numbers for that. And Axie is still probably number one, but you can see that the numbers are declining. And the question is, if you've invested in something like Axie, is it a smart bet to stay in Axie and hope that they morph their game and become Google from being America Online, or should you be placing your bets somewhere completely different? Haseeb, I'd love to get your thought process here.
Well, look, first I'll say I'm a venture capitalist. I'm not a day trader, so I try not to give investment advice, especially in venues like this. But what I will say is that, to your point, we're very much in the V1 of all of this. When you probably first got onto Axie Infinity, my guess is that the reason why you got onto Axie Infinity was not that somebody recommended the gameplay to you and said, "Hey, this is such a fun game. I can't stop playing it. It's just so enjoyable." They probably tell you like, "Hey, you can make money."
I needed to make $80 a day. That's
exactly right. Like the reason why we talk about this stuff is because we talk about play to earn, which is about making money. And I think what we're eventually going to see is we're going to see an evolution of this stuff, right? Like at the end of the day, and this is something I talk about a lot, even I think it's true in DeFi, it's true in crypto in general, is that we like to talk a lot about token economics. It's probably the most interesting and most unique thing about crypto is that you can have all these interesting mechanics and kind of tokenize alchemy to make one thing into another. But at the end of the day, Like the real thing that matters is the thing that you're building, the actual product, is it good or not? Is it fun? Is it actually an enjoyable game? And until you get games that are, to say at least self-recommending, such that regardless of whether or not anyone's making money, it's just a great game. And then you layer crypto on top of that, that's where you can really get, if you take rocket fuel and you actually put it into a rocket ship, that's what gets you going to the moon. But just having rocket fuel alone, if you don't have the right vehicle for it, isn't going to get you to where you want to be. And so I think what we've seen in this Gen 1 is that we've seen a lot of rocket fuel, but we don't have the rockets yet.
I'd love to add to that as well. The interesting thing about the gaming space is if you talk to like a lot of like traditional gamers, and I'm a gamer myself, they're like, do you want Web3? And they sometimes say no because they see these play to earn games. And I'm not picking on this category, but I would love to see that transform to play and earn games where it's like, as you said, like a really good game that also has these Web3 components that you're not only playing to earn. I'm not picking on Axie or any of those. I think they're great, but I think we need to transition from play to earn, implying you're only playing to earn as a job, to getting into a model where we have a great game, we have a Call of Duty, we have a World of Warcraft that also has these Web3 components that can solve a lot of the problems that make a game just a game go to something that can create value for the player as well as the game company.
So the thing is, we see this over and over again in crypto. This is not new, right? So we saw the same thing with liquidity mining back when we saw DeFi summer, is that people discovered this rocket fuel for DeFi, which is liquidity mining. And they started launching all sorts of stuff that was super low quality, but it was liquidity mining. People were like, oh my God, this is amazing. Tokens went up, people got super excited. And they realized a few months later, is that like, hey, liquidity mining is a powerful mechanic. But in order for liquidity mining to matter, you need a great product. The same thing happened with layer ones and having ecosystem funds, and every layer one had an ecosystem fund. Every layer one, we were talking about Luna, you had all these different 20% APY things. People was like, wow, this is magic. You can automatically create a highly adopted layer one. And then of course, you realize that just having mechanics is not enough to create a great product and create a sticky product. So play to earn is a powerful mechanic. We learned that really quickly, right? Now the question is, how do you use that mechanic to create a great sort of all-in experience? And that's that's why I look to Yat. He's one of the pioneers in developing this portfolio of approaches, and we're all learning in real time. And Axie Infinity, Sandbox, all these guys are seeing what's happening, taking feedback from what's happening in this ecosystem and learning and improving from it. So when you look at the Gen 1, you're going to see a lot of jank. And I think that's normal. It happens in every single cycle of discovery in crypto. But the Gen 2 of crypto gaming is going to be even better because we're learning all this stuff in real time.
Yeah, absolutely. I mean, just maybe to quickly add, we described Axie Infinity as a little bit like the Angry Birds moment in blockchain gaming, where it demonstrated what was possible. But one of the big things that Angry Birds also did in mobile gaming was it wasn't so much that it appealed to traditional gamer, it brought in a new kind of gamer. And that's basically what play to earn, and really at Axie Infinity demonstrated. It brought a way in which you could be entertained and engage in the gaming model that was passive. Because in the gaming grew into what is now 3 billion users, and as an industry, it's actually larger than the movies and music combined. But it still left out about 1.5 billion, close to 2 billion people in the world who has tried these mobile games and said, you know what, I don't really like that. The big innovation in mobile gaming was that through the swipe of a finger, you could actually feel like you're a good gamer. Because before, if you remember console gaming, you had to really be good with the fingers and the buttons and everything. You had to be really pro at this to do well, which basically capped the audience. But now even for a certain audience, the even swiping the finger and spending time is too much work. So the passive engagement is I can own these assets and I can give it to someone else to play. And it doesn't necessarily mean that I must make a lot of money, but I can engage from a community standpoint, meaning this is the pathway where we're going to go from 3 billion gamers to everyone's going to game in the world because they can have passive engagement. Like my mother basically can give her assets to her grandchildren and say, I can't play this game, but let's hear this and go have some fun and engage together in a passive way, right? So this is a sort of another part of the paradigm that's growing. And just for disclosure, not that I'm necessarily defending Axie, we think they're great, right? We were their lead investor back in 2019. And I think the one thing you need to look at is just teams. Are these good teams? Do they know the space? And just as we have in the first generation of gaming companies, EA was an early game company, back in the 80s, and they're still really big today, right? And this comes from deep expertise and from training and from knowledge and from engagement and from passion. And there weren't that many 4 years ago, and I think many of those who they may not have a great success even 3-4 years ago, but they have an experience that others don't have, and will continue, I think, to have an advantage. So that's what we want to back. We want to back the true believers in the space who just won't give up until they make it work.
All right, so that's a good time for us to just pay some bills and give some love to our sponsors. When we get back, I've got a lot of questions for Punk 6529. I need to know the story of how the punk got you and where the punk's going. So let's just pay some bills and we'll be back in a sec. This big Friday banter is brought to you by NordVPN. NordVPN is a security product that every crypto trader must have as part of their essential tools. For crypto traders, NordVPN encrypts your personal data, hides your IP address, and enables you to access crypto trading platforms from any geographical location, giving you the freedom to buy and sell crypto completely anonymously. It also protects you from hackers and phishing attacks. NordVPN is super easy to use, offers security for up to 6 devices, and with servers in over 60 countries, is the fastest VPN out there. The promotional link below gives you up to 61% discount and a 30-day money-back guarantee on your purchase. All right, we're back. Friday Banter. Got some big guests. The discussion is all around gaming and metaverse. We've got Punk 6529 with us, and I've got to get into the mindset of Punk 6529. So, Punk, I've got to ask you, when did you get the Punk? How did you get your hands onto the Punk? What was your mindset when you got into this Punk?
So, I had, I think, like everyone here, noticed NFTs the first time around, CryptoKitties here, and ignored them altogether. Like, okay, that's cute. Like, not interesting for me. And I've been in crypto a very long time, and I know a lot of very, very serious, heavy, old-timer, technical crypto people who are Bitcoin mining in 2011, people who work on consensus algorithms. And late 2020, I was getting this weird spidey sense. I was saying, we need to look at NFTs. And everyone told me, this is stupid. We want to do important stuff. We're all going to do DeFi. Like, DeFi is where all the interesting stuff. Like, we're not into art. People who have been in Bitcoin since 2011 were telling me, but you can download the JPEG. They were right-click saving as me, right? And I'm like, you got to be kidding me. Like, this is like saying you can download your Bitcoins, right? It's a token. How can you download it? You can't download the token. What kind of ridiculous discussion is this? But long story short, like, everyone was like, you're nuts. Don't waste any time on this. So I started digging into it by myself. And my very first NFT was, I don't know, like 0.01 ETH or something, right? Some like random little nothing on OpenSea. And then I bought up 0.1 ETH and another one and another one. And I was seeing also, G Money came out with his thread on the Ape, and then 4156 did the same thing. And I'm buying NFTs and buying NFTs and buying NFTs. I'm like, oh, let's get some punks. So I got some punks. But back then it wasn't like, oh, I'm going to start tweeting 17,000 times a day, right? Like, punks are going to be useful. And yeah, this kind of works. This fits my style, right? But no immediate. And then I bought more NFTs and more NFTs. And kind of by the middle of the summer, I had bought a lot of NFTs. And I had 3 big takeaways by then, of which 2 are really important. The kind of middle one's medium important. I believe this is crypto's consumer moment, right? Technology becomes consumer ready when you stop talking about the technology, right? Instagram uses Python, but nobody has ever said in world history, you should download Instagram. It's so cool. Do you know that they use Python on the back end? Right? Like, no one says that. Right? And the whole time that I've been in crypto, our discussions are like, the beginning of this discussion was about if Solana is more performant than Ethereum. You know what you guys remind me of? Those Oracle and IBM ads, like in the 1990s in the airports. Which one has more transactions per second? Okay, that's super interesting to CIOs of Fortune 500 companies and basically nobody else on the planet, right? Does your mom, your wife, your kid care how many transactions an Oracle database can do per second? Nobody cares about this, right? Like 1% of the population cares about this. And like 98% of crypto talk pre-NFTs is about things that like 1% of the population cares about. And then we're like, wow, nobody's adopting this stuff, right? Of course, nobody's adopting this stuff. It's like, we're talking about the back end. And what I noticed, the dialogue in NFTs, everyone knows they're on Ethereum or on Tezos or Solana in some very rare cases, and there's a consensus mechanism behind them. Everyone knows this. But that's not what you talk about, right? Do you want the hoodie or do you want the cowboy hat? Oh, wow, look at this X. It's good. It's bad. I like this one more. How do I use this in a game, right? Okay, all these things are consumer-like activities. The only chance we scale decentralized infrastructure is if regular people use it. My view as of last year, and I just had this discussion with some very big names in crypto, mostly we failed on decentralization. Like the numbers have gone up. That's very nice. Anyone who's been in crypto for several years, the numbers have gone up, so that's pleasant. But what percent of crypto in the West isn't actually on an exchange or at a qualified custodian? Almost all of it is. In which case, any of the important things about crypto, that you can have more resilient, decentralized societal structure, aren't actually true. Very big names in crypto actually have their crypto at Coinbase. That's fine. It might be a reasonable choice on an individual basis, but societally, you haven't built any resilience with that, right? You might as well just have your money at JP Morgan Chase. You can have a synthetic Bitcoin at JP Morgan Chase with the exact same profile. So that was like one. The other part that I thought relates to this, there's a very unique dynamic in NFTs that doesn't exist in Bitcoin, Ethereum, Solana, anything else, that existing off-chain organizations have an incentive to get involved. Dolce & Gabbana did an NFT drop and held a party at NFT NYC last year. And I thought that was super interesting because I've never seen Dolce & Gabbana at any crypto conference, right? Why would they come to a crypto conference? Right? Like what? I don't think they go to Oracle database conferences and hold parties either, right? Right? Oh, look, it's database administrators. Let's bring the fashion models, right? Why'd you do that? But the reason
why I laugh is because I go to crypto conferences and Dolce & Gabbana is not there, that's for sure.
Correct. But at FT NYC, they were. And it's this point. NFTs are generic containers for intangible assets. And in any modern society, intangible assets are the whole thing. I mean, yeah, sure, you need some power plants and roads and whatever, but like most modern economies are built on intangible assets, right? And so Dolce & Gabbana has a pre-existing brand equity, and NFTs are like, 90% gross margin. So unlike mining Bitcoin, which Solana is not going to do, or staking Ethereum, which Dolce & Gabbana is not going to do, or staking Ethereum, which Dolce & Gabbana is not going to do, right? Minting a digital Dolce & Gabbana dress and selling it for hundreds of thousands of dollars at 80%, 90% gross margins is a very appealing thing for Dolce & Gabbana to do. And you saw, Nike bought Artifact and Adidas did their own drop. Every single fashion lifestyle company in the next 2 or 3 years will issue NFTs. After that, the consumer packaged goods companies will do it. There'll be a QR code on a 6-pack of Coke. You'll get some effectively valueless drop, but they will know that Coke was sold to someone in Knoxville, Tennessee. It's the Super Bowl. They'll airdrop you a coupon for 50% off. And then we can argue if that's going to be on an L2 or Solana or whatever, right? It's not going to be on the Ethereum base layer, right? But then, athletic teams will do it, universities will do it, religious groups will do it, everyone's going to do it. So all we need to do, and this is, it goes to your prior discussions, I am completely unconcerned about day-to-day utility today, right? NFTs the metaverse, all this stuff. It's like the internet. There'll be hundreds of applications, then thousands of applications, and then tens of thousands of applications. And what do we have in front of us right now is the following, right? Like what's the metaverse, right? The metaverse is not going to be, we're going to put virtual reality goggles and go into Second Life number 2, right? It's going to be the internet with better visualization. Today, it's better 3D rendering in the browser. In the long run, it's augmented reality, right? There'll be a little bit of virtual reality, but in the long run, you'll be wearing a pair of glasses and you'll have an ambient digital environment all around you, right? That's a decade away. That's number 1. But what we now have with NFTs is persistent, interoperable, self-sovereign, digital objects. We've never had this before, right? Even today, I can take the punk, I can sign him to a social network. I can sign him to a gallery in I can put him and get a loan against him. For sure, there will be thousands of applications in a few years where we can use them, right? And right now, we have 2 important things we need to solve. The first is we need adoption, because metaverses, all these things, they're social networks, right? You can't have small ones, right? There's a little bit, the biggest delusion right now in the NFT space is that there's like 1 million people in NFTs and there's 873 launched metaverses. And at this scale, they're all doomed, right? Because Facebook has 2 billion daily active users. And like the average NFT-based metaverse has like 6. So we somehow need to like consolidate around some type of general standards and then increase the size of the space 10, 50, 100x in the next 2 or 3 years. Otherwise, despite all these nice things we're saying, we're going to end up back on centralized platforms, just like even the whole crypto team. Let's see, what do we use? Crypto Twitter, centralized. Discord, centralized.
I got it.
Exchanges, centralized, right? So we've got get enough scale so that the corporations mint to NFTs, not to the Horizon API, right? Not to the Epic API, not to the Apple API, because those network effects will build up in the mid-2020s.
All right,
The
so
other thing we have to prevent, last thing, I'm going to say this,
Hmm.
we are still underestimating the regulatory risk. The current law of the land in the United States means that in 2024, effectively Uniswap is unusable, and OpenSea will have to become fully KYC'd to operate, right? It'll be a felony to spend more than $10,000 in MetaMask Vault without reporting the KYC of your counterparty. That's the law today. And everyone's, I think, a little bit too complacent about this.
Haseeb, what do you think? I see you nodding your head and moving your eyebrows in strange ways. Just wondering what that's.
I do tend to have strange eyebrows. Yeah, no, look, I think Punk is clearly a permeable, and I think that plays into, although he has his concerns, I think we all do. I think so. I'm a little bit less worried about regulation when it comes to some of these things, because look, I mean, this is the exact same thing people said about Bitcoin 10 years ago. Bitcoin, it's clearly, it's against the law to mint private money. Like, it's always been against the law to create private money, but there we go. Bitcoin exists. And the reason why it exists is because the norms have shifted over time, because people understand, like, hey, something new is happening and it requires a different understanding and interpretation of this stuff. Now, if it's not popular, if nobody wants it, if nobody actually uses it, then it's gonna become illegal, because regulators are gonna pick on it and nobody's gonna come to their rescue. But from the beginning, there's always been this perception that crypto is illegal, ICOs are illegal, tokens are illegal, liquidity mining is illegal, NFTs are illegal, metaverses are illegal. The reason why that's true is that it's somewhere in the panoply of laws that's out there. You can find some reason to say that, hey, you're breaking this regulation, or you're breaking this law, or whatever. At least in the US and in most of the first world countries, a good first approximation is that lawmakers will basically do what's popular. And if crypto is popular, if a lot of people like it and care about it and want it, that is your best defense in creating a regulatory regime that's going to protect your ability to do this stuff, right? And the second thing, of course, is that practically speaking, there's some things that you kind of can't, it doesn't really matter if you make them illegal, people are going to do them anyway. So a good example is gambling, right? So there's no law, there are a lot of laws in the books about gambling, right? But no government anywhere in the world is going to be able to stop you and me from making a bet with each other. Doesn't matter what laws are on the books. Like nobody even tries to say it's illegal for you and your friend to make a bet. Now, you can control your ability to run a casino. And in every country in the world, casinos are very highly regulated. But the core thing of gambling, of just going and making a bet with somebody, there's no country, even, maybe in like countries with Sharia law, you can claim, hey, it's illegal for you to go gamble with this other person. But practically speaking, nobody can stop you. And crypto, that's what fundamentally crypto is about changing the balance of power between individuals and governments and regulators and lawmakers. And that's going to be reflected in the way that we use these things 10, 15, 20 years from now. So long run, I think the thing to be worried about is macro. Macro is scary, right? If people are speculating less, if people are, if we see retail participation in all of these markets going down, if we see real rates going up and people feeling less need to go out and do riskier things, that's going to affect everything in crypto as it already has. But in the long run, if we create great products, the thing that doesn't go away in an environment where rates are going up is consumption. Right. So the speculative stuff is going to do worse, and things that people actually use, NFTs being one of the primary examples. People are actually buying and showing NFTs. They're playing the games. They're putting them in their profile pictures. That's consumption. That's activity. That stuff is, I think, what's going to end up doing relatively better in an environment where we see less demand for speculation, but more demand for what are people actually using today.
So you spoke about macro, you touched on macro, and I think this is probably a good last segment of the show is speaking about macro, because it seems to be getting pretty scary out there. You had, I think I've got one or two videos here. Let me quickly have a look here. You had Jamie Dimon come on this week.
Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself.
So he's telling us to brace ourselves. You had Larry Fink come on.
We've had sort of a rocky road, can we say, so far this year. As you look forward, is there any real prospect they can recoup in the second half of the year?
Probably not totally. Let's start off. The market has recalibrated itself. We witnessed now a change in policy in the Federal Reserve. We raised short rates. We saw a recalibration of growth stocks. That's principally the majority of the downfall, and yet the index are masking some of the problems because part of the index are energy companies, commodity companies that are up quite a bit. So if you look at the volatility in the market and the spread between winners and losers, it's pretty broad this year, and so we've taken out a lot of those gains that we saw during the COVID years. So
I'm not going to play the whole thing, but Larry Fink's also saying that we're in trouble, and it just feels like we're in trouble. It feels like the Fed doesn't have anything under control. And I'm not asking you guys to predict the outcome of this because I think that would be futile. I think that anyone who tries to predict the outcome, but as investors in this space, is this a fire sale? Is this are valuations coming down to the point where they're actually completely ridiculous, or we're not there yet? Brian, maybe you can start.
Well, yeah, one thing I was going to point out is, of course, those guys have drastically different, incentives than the average person, right? So it's really hard for the average person to relate to what those guys are thinking that run these massive portfolios and have these huge companies and banks and things like that. But what's always interesting to me is, I'm a bit of a trader, but not like a hardcore trader, but I'm looking at the Bitcoin 1-day chart, for instance, right now. And in the last 3 weeks, there's this range up, down, up, down, up, down, up, down, up, down. Basically a monkey could trade this, right? And there's these really great times sometimes in these kind of undecided markets where we're going, we had a sharp drop, and then we had this kind of sideways motion. And I always look for these sideways motions. And I think for people that do want to trade, you can just trade Bitcoin. You don't have to get into risky alts. You can trade ETH too, but there's actually lots of opportunity to capitalize in these kind of sideways markets.
If you're a trader, I get it, but I'm much more interested in long-term investing because I know valuations were super inflated. Yat, are you seeing valuations on the floor again? Have companies realized the type of market that we're in, or are they still wearing delusional shades?
So first of all, have valuations come down? Absolutely, valuations have come down. But the main reason why valuations have come down is because some of the sort of fundamentals have reduced, except these companies still make money. But because the relative value of the token, for instance, have come down, the actual sort of in fiat terms, the kind of revenue that might be forecasted has come down as well in that sort of example. So fundamentally still good companies, but perhaps sort of slightly lower sort of bottom lines and numbers. So valuations have come down. But I think the example that we think of it and why we're still actively investing, and of course it could also be great opportunities, is the macro to us long term. Yeah, it looks excellent from our perspective because there's still a lot, still billions of users to be onboarded from, and actually we think this is a great time to enter. We had our biggest gains when we actually entered in 2018 and 2019, right? And of course, that was a real winter. Ethereum was like, less than $100, right? Bitcoin was 3,000, right?
I remember that.
Those were sort of nasty. But one of the big reasons was that the only reason that people generally were in the space is for speculation. And when things went down, they all ran for the hills. This is different now. In the space, people are building, people are excited. It's not just the money that is ready to be invested. It's the smartest people entering the space as well. We're seeing a mass immigration of talent into the metaverse that is essentially sort of akin to, like this new nations or sort of that's being built around where the smartest people exist. And so it makes sense to invest in that. One of the examples I sometimes give is like, it's a little bit like China 20, 30 years ago. The macro in China was excellent. But from the outside, if you never visited China, it seemed impossible that, a new country would emerge with, that was basically sort of absolutely devastated and ultimately become, an economic powerhouse that would, rival the United States in, basically 3 decades. How is that possible? How can this be? And, people used to say, scam, this is whatever, all this stuff. But here we are. And of course, China is going through their own struggles. But broadly speaking, it is an economic powerhouse and has responsible for lifting, basically close to 1 billion people out of poverty or so, right? So I think the same parallels exist here. So if you have a long-term lens, I don't think it's too late. Of course, if you're trading, that's a different story. That's timing. That's not what we're about. And I think that's not what everyone here is about. So I won't comment on that. But if you're long-term optimistic, then I think you should be okay.
All right, guys, we've got to leave it at that. I want to thank you all for coming on to Friday Banter. You're all part of the Banter fam officially now. Love to get you guys all back again individually and on a much smaller panel so we can spend more time together. I'm sure we're going to make that happen. But for now, thank you on behalf of the fam. Thank you on behalf of everything else. Much love to you guys, and hopefully we'll see you guys soon. Alrighty, Banter fam. That was crazy. That was what a lot of alpha. I mean, talking about alpha, and more alpha all in one show. Loved hosting it. Sure, it was a completely different perspective. Remember that this show was brought to you by NordVPN. If you want to get a NordVPN, it's so simple. Just go into the description, click on the NordVPN link. You'll get a special from NordVPN. It is $3.16 a month to protect your crypto, to mask your IP address, and to surf the internet anonymously, where people don't know where you're surfing. It's one of the basic tools that every single person must have, and they are the sponsor of the show, and they did manage to bring us this amazing Friday Banter. Also, remember, super important that you remember, Sheldino Tentino, he's setting up a trade. He said, he came on earlier, and he said there's a trade. There's a trade coming up.
The damn time, just to make sure we have the right momentum.
And he said, get ready, prepare yourself. So you want to prepare yourselves. Again, go to the description below. In fact, let me actually even help you with this. It's so simple. Yet some people don't do it. So let's quickly go there, and you can see it. You can see it for yourselves. Here. Yet some people don't do it. Here we go. So let's quickly go there. And wow, I actually do look quite tired. I should maybe get some sleep tonight. No, I do. I look tired. All right, so you can see over here. Here are all the referral links. Click on any of these referral links, and each one of them will get you into a Banter special. You support the channel, and you get ready for the trades. You got BYBIT. You sign up, you can get up to $4,800 in trading bonuses. KuCoin, you get up to $1,000, or you can win up to $1,000. MEXC, BBS, and of course, don't forget to support our sponsor NordVPN and protect your crypto. Listen, I will see you guys again on the weekend when Sheldino goes live. Until then, much love and trade well, my friends.